morning, everyone, and thank you very much for coming this morning. I am pleased to be here today to present the third quarter fiscal update and the economic statement for the province of Alberta. 3 months ago, I stood in this same spot and shared some pretty positive results for our second quarter, which showed that operational revenues were up, that we continued to show responsible spending, and that our capital spending remained on track. It was good news, but I tempered my announcement of the results with the phrase cautious optimism. And so here we are now, and third quarter results show we're making further progress by continuing on the same road we followed for the past 9 months. So there's no denying it's been a long road, but third quarter operating results are back in the black, and we've ended the quarter with an operational surplus. And I'm expecting that we will have a $1.4 billion surplus by the end of the year. And as you can see, we're turning the corner. But we know that we must still be careful about what lies ahead. We need to be ready for what we can't see around that corner. So even though the results are pretty good news, like in the second quarter, I'm delivering these results with the same cautious optimism. Alberta is in a good financial position right now, but we all know how much our revenues can fluctuate in a short period of time. Certainly, we will deal with the pressures that come from a rapidly growing population, but we're not opening up the spending tabs. Today's surplus will be used to cushion future drops in revenue. We found ourselves facing a revenue shortfall last March before the last budget. So with Budget 2013, we had to make some tough decisions. At that time, we also introduced the Building Alberta Plan. The Building Alberta Plan is a blueprint for success and sustainability, and it helped us address our revenue challenges, and it's changing the course of our province. The Building Alberta Plan is the right plan for today's Albertans, and we're going to stick with it. It's clear that our hard work in all previous 3 quarters has led us to a much brighter place than we were at this time last year. In fact, coming out of the third quarter, Alberta's economy is outperforming Canada and the US. And there's no sign that we're slowing down. We are now well positioned to weather our challenges, and as we continue to follow our Building Alberta path, we're setting the stage for success in the next fiscal year and many years to come. Overall, the Alberta economy grew by an estimated 3.3% in 2013. That's higher than the 2.9% that we forecast at budget last March. The forecast for economic growth in 2014 has also been revised upwards, and we expect to see GDP growth of approximately 3.7%. Compare that to the rest of Canada or the United States. Economic strength, we're also the fastest growing province in Canada. Without a doubt, many people are attracted to our growing job opportunities, especially while the rest of the country has seen job growth slow down. We're leading the nation. In 2013, Alberta added an average of 5,700 jobs per month, compared with only 2,600 in all other provinces combined. Forecasters, including the Conference Board of Canada, TD, and RBC, expect that Alberta will be Canada's job growth leader in 2014 as well. In fact, we brought together some of the leading economists in the country for a forecasting summit in December, and most of them agreed Alberta will be the place to be in the coming years. We held that summit so that the experts could advise us on our forecasts and help us to be as accurate as possible in Budget 2014. Most of them also had some pretty good things to say about Alberta. And here's a quote from that meeting. And I quote, "Even if oil prices don't make great strides from here, Alberta will still be at the high end of the leaderboard for Canada for the next 5 years. Expect Alberta to lead the way for quite a period of time," end quote. So they've pegged Alberta as the place to be, economically and financially in the next 5 years. And certainly our strong economy is something to be optimistic about. But as Finance Minister, it is my responsibility to ensure that we are tempering our expectations, that we are understanding that as we turn the corner, we don't know what lies ahead. Because while our economic indicators are strong and are expected to remain strong for years to come, we also have our share of fiscal challenges to deal with, not the least of which is the volatility of energy prices, including the differential between Western Texas Intermediate and the price Alberta oil sands producers receive for bitumen. As you can see, while the differential is now forecast narrower than the Budget 2013 forecast, the differential remains very volatile. We've seen large swings in a short period of time over the past year. Another challenge, and a significant one, is last summer's flood in southern Alberta. It was Canada's most expensive natural disaster at about $6 billion. That's an event that's going to affect our bottom line as we work to rebuild and to recover. To date, government has allocated just over $1.2 billion in flood support to help Albertans, small business owners, and communities rebuild. And as of the end of the third quarter, we've spent $537 million in operating and $33 million in capital spending for flood recovery. This includes over $400 million in disaster recovery program funding. We haven't received any federal funding for disaster recovery in the third quarter, but as you all know, the federal budget did commit to $2.8 billion in flood recovery. We hope to see some cash soon. Our work is also helping us deal with the pressures of rapid population growth. Alberta's booming population continues to be a big factor in third quarter, just as it was in the second quarter, and just as it will be again in the fourth quarter, and we expect many quarters to come. And folks, the story isn't changing because as Canada's fastest growing province, Alberta's population growth is the story. We're growing by more than 100,000 people every year. That is like adding a city the size of Red Deer, and it's triple the national growth rate. We're expected to surpass 5 million people by the time my grandchildren graduate high school. It's in about a decade or so. And through our Building Alberta plan, we're investing in families and communities today and 20 years from now. And we're doing that while remaining fiscally responsible today. The two might seem at odds with each other, but in the first 3 quarters of this fiscal year, we're proving it's possible. Our third quarter results show that we are on the right path. The plan is working. So let's take a look at some of the results in the third quarter. As you can see, Alberta continues to be the only province in a net asset position. And as you can see, the negative change is shrinking much less this year than what we forecast at budget. And overall, for the 9 months ending, we're looking at a $1.2 billion operational surplus. And in the first 9 months of this fiscal year, operational revenue is nearly $31 billion. That's $2.7 billion higher than expected, due primarily to higher energy prices, investment income, as well as the lower Canadian dollar. Operational expense was also higher than expected. At $29.6 billion, spending increased by $1.1 billion from the estimate, due obviously to an increase in operating and disaster spending, including the spending on the flood recovery. We also needed to address some of our population growth challenges with increased spending to ease enrollment and caseload pressures in health, education, and human services. The specifics of those will be addressed in supplementary estimates, which would be introduced in the House next week. And as we continue to build and rebuild Alberta, capital spending was $3.5 billion, which is on track with the budget estimate on capital spending. Albertans have told us and continue to tell us that we must continue to build. That's why Budget 2013 introduced a borrowing plan to ensure Albertans have access to public infrastructure. Direct borrowing for capital purposes was $2.7 billion. This was higher than expected, mainly because of projects that we reprofiled from last year and because of some market opportunities that we took advantage of. To be clear, we are only borrowing for capital projects. We are not borrowing for money to pay for programs and services. Our borrowing plan has strict limits. It includes a cap on debt servicing costs that limits how much we can borrow. And on average, borrowing costs year to date are just under 3.7%. Now compare that to the 11.6% that the Heritage Fund has earned in year to date. Albertans have told us they approve of this borrowing structure and for infrastructure when it makes financial sense. And if our savings are earning more money than what we pay to borrow, 3% compared to 11%, clearly it makes some financial sense. Alberta's AAA credit rating means we have access to the lowest possible borrowing costs. It also means that our bonds are sought after around the world. In January, I had the opportunity to meet with investors in Asia and promote investment in our capital bonds. And I can tell you, those meetings go pretty smoothly when you have a credit rating like Alberta's to talk about. Investors see the value of investing in our province, and it will grow. There is also great value in saving. That's why Budget 2013 introduced government's first legislated savings plan in decades. So every year, when our revenue comes in, we set aside money to pay down our debt. And we also take money off the top and put it into savings. That's each and every year, despite what kind of challenges we might have. We now expect the contingency fund to grow to $4.6 billion by the end of this year. Overall, our savings will grow to more than $23 billion by the end of this fiscal year. And as you can see, we've come quite a ways since this point last year. Despite some significant challenges, Alberta has turned and is turning the corner. As I said, we don't know what's around that corner, but the road does seem to appear to be bright. I will be tabling Budget 2014 next week, and you'll find that for the most part, the new budget will continue on the same path that has served us well in the first 3 quarters of this fiscal year. That path has gotten us to where we are today. Higher revenues, an operational surplus, the strongest economic position in North America, and it's taking us to where we need to be tomorrow, when 5 million Albertans will call this province home within the next decade or so. So to sum it up, I am very proud of the hard work that all of Alberta's public sector has done to bring us to the point that we're in today. We've accomplished a great deal over this year. We have much more work to do. With that, I'll be happy to take any questions.
You say the spending taps will not be opened up as a result of this surplus and also the increased revenue, but we've gone over budget on healthcare, education, and social programs by $1.1 billion. How does that make sense?
Well, that's not all on healthcare and education spending. What we're doing is we're accommodating the growth in the province in those areas, but a big chunk of that is also on the flood disaster this year. So we are booking a fairly significant amount of operational expense this year, as did the federal government. That's why they put the 2.8 in their budget numbers this year. We are also looking at some smaller capital amounts so far, but the capital will grow in the out years for the flood recovery. But a big chunk of that operational was the flood operational side. You'll see in the supplementary estimates the reasoning behind those investments in post-secondary education and healthcare. I can tell you that when you look at the graph that we have on population and the growth that we had last year, that we think we're going to have next year, those are the areas that we will be addressing.
Can you tell us what the total debt is right now?
It's in your package.
It's not quite total in the package.
Our borrowing this year was 2.7, I believe, and we're probably looking at, on the capital plan, 14 billion, I believe, is what we've got on the capital side, but I'll get on the technical briefing, we'll get you the exact number at 9 months, because I'm looking at what we're doing for the next year. I've got next year's number in my head, and I don't want to give you that. So we'll get you the technical one for the 9 months ending.
The $4.8 billion on the contingency fund, is that by the end of the current fiscal year or the next fiscal year?
4.6 is this current year.
This is much higher than predicted, right?
Yes, it is.
And why is that? I mean, it was supposed to be 691 by the end of this year.
And that's true. We had budgeted that we would be drawing down on the contingency account, which we did. Our operational revenue is up considerably in terms of the non-renewable resource revenues, as well as the amount that we're booking from the federal government. That 4.6 is, under the legislation, the contingency account is the first account that surpluses go to, so that we're prepared for what might happen down the road next year.
As I understood it, though, only 5% of resource revenue goes into the contingency fund.
That's after, no, 5% of the resource revenue goes into the Heritage Savings Trust Fund. Contingency fund is there to be used in contingency. It's not the Heritage Savings Trust Fund.
What is the formula for putting money in the contingency account?
The first amounts of surpluses after our operational budget, after we've taken already the debt servicing, after we've taken the amount for the non-renewable resource revenue into the Heritage Savings Trust Fund, surpluses there will go to the contingency account until it reaches the 5 billion mark, which is what we've set as the contingency amount that we want to refill. After that, it's either contingency account, capital plan, or the Heritage Savings Trust Fund. Okay, anybody on the phone?
Operator, do we have any questions on the line?
Yes, your first question comes from Chris Barco with the Calgary Herald. Your line is open.
Hi, Minister Horner. Can you give us an understanding of where you stand, not from an operational surplus point of view for the year, but from a consolidated point of view, so we can compare that with last year's numbers?
Yeah, we're tracking right now to end up at about a The number's not on here right now. Oh, sorry, yes it is. We're looking at, we had said a consolidated net asset position would be down 1.97 last year at budget. We're looking at that probably being in the range of a decrease of about 335 million. So our net assets are going up. The revised forecast is 43.9 billion, but if you wanted to look at a consolidated deficit surplus number, which we can do, in the budget, we had a consolidated deficit of about 1.97. We're estimating that at third quarter that consolidated deficit would be down to about 335 million.
And can you give us an understanding of where you see that being at the end of this fiscal year?
Pretty close to that number, actually, but the actual surplus on operating would be about 1.4.
Right, but I mean on the consolidated basis, by the year end, do you expect to be near a surplus position, or will you still be in a deficit?
We'll still be in a slight deficit.
Okay, thank you.
Any other questions? Or go ahead, Matt.
What does this mean for budget 2014? I know you can't say too much about it, but if you're in a surplus position, does that mean over the next budget year that there will be, it won't be as tough as last year?
I think it's safe to say that, and as I said in my opening comments, that we're rounding that bend. That we saw some challenges that hit us in terms of the differential and the flood expenditures that we had last year. We've managed our way through that quite well, and we're going to end the year in a much better position than we thought we were, which means that, yes, we'll be starting next year in a better position. But as I said, it's not the time to open the taps and start being irresponsible with how we handle that. We have legislation now on our savings, on our surplus amounts. We know where those monies are going to be going. We have a plan for that, and you'll see that in the budget next week.
Can you tell us what the impact of the dollar has been?
Actually, the impact of the dollar has been positive to us, obviously, as it goes down. You know, if you look at last Friday's or yesterday's spot rate of around 90.5 cents, the year-to-date is at about 95.45, which is what we've changed our forecast in these numbers. So it isn't that, you know, 90 is what we get for the whole year. It has to be the annualized number, and right now that annualized number is running at about 95.5. Certainly, as we move into the new budget year, we had a lot of discussion with all of the forecasters that we brought into 512 here at the legislature last December, and picked their brains as to where they felt the Canadian dollar was going to go forward, where they felt some of these other numbers were going to be. So the forecast that we have built into the budget has been discussed at length with a lot of the economic advisors for the major banks and the industry, and that's where we got our forecast from. But it had a significant impact on our revenue forecast.
As far as the flood spending goes, were there any, now the bills are coming in, were there any surprises to you in terms of something costing less than you thought it might or more?
Our numbers are getting better in terms of refining those numbers as we start to get some of the actual bills in and we start to see some of the engineering work that's going to be done. We're not in a position right now to give you a final definite number because a lot of those numbers are still coming in. I think we're hopeful that we're within the numbers that we had talked about. I don't see it rising from where we're at today. But, you know, with the flood, there's usually a few surprises in there, so we'll wait and see on that. But we're being very prudent and cautious on that one as well.
Minister, you mentioned the differential. Last year, when we were talking deficit, we had lots of talk of the bitumen bubble and all the drama around how that was going to affect our budget. And here we are in a 2.7 billion more than we expected. What happened? I know you mentioned it, but can you expand on that? What happened?
Well, I mean, like everything on the Alberta budgeting process, there's so many variables that will have an effect. As it turned out, we had a number of variables that all worked in the right direction for us this time. The dollar went down, as we were just chatting about. The price of oil is considerably higher than what we had thought it was going to be for the full year. The differential did have a small, as you saw in the graph, there was an area there during the year that it did close in fairly significantly. We're back wide again right now. Depending upon what happens with some of that market access pieces, it has a significant impact on what that differential is going to be. You have areas where our corporate tax and personal income tax is it doesn't reflect it here so much in the sense of the timing, but personal income tax, corporate income tax is also up higher than where we thought. A lot of that's due because the economy was much more robust than we thought it was going to be, and we've increased our growth numbers. So you have all of the factors working in the right direction for us over the last 9 months.
So how justified was all the concern about the Richmond bubble then?
I think you saw the big bubble on the graph, and at the prices that the economists were telling us and industry, it was a very significant concern.
We have a question from McDougall. Operator? I believe we have a question from McDougall.
Yeah, hello.
Hello.
Minister.
Yep.
It's Don Braid here. Could you tell me, Minister, how many oil sands projects do you expect to get into payout in 2014-15?
You'll see that, some reference to that, Don, next week.
Thank you very much, sir.
Can you take another question from McDougall?
Sure.
Yep.
This is Kelly Cradovan from the Globe. I'm wondering whether you'll be able to put money into the capital repayment fund this year or next.
We did, we will, and we'll continue to do so.
How do you have the money to do that as well?
We'd take that money off the top as well. We put money aside for the amortization that we did on the 30-year plan. That money is set aside every year. It was in the budget last year. Unfortunately, a lot of people noticed that, but it was in the budget last year. It will be in the budget this year, and it'll be in the budget next year.
Minister, Don Braid again. I'm curious about how you put $2.4 billion more into the contingency fund. Where does that come from? And you're still showing that $1.4 billion upside tick. I'm not quite clear how those numbers work. That big a gain in contingency.
The revenue was considerably higher than budget, the $2.7 billion, Don, so, and that's to the 9 months. What you're looking at is the year-end number of 4.6. What we're projecting is that our year-end number for 4.6 is because of the increase in revenues that we have over the increase in expenditures, obviously, but that allows us to put that money in. As I said earlier, surplus money goes to contingency account first until it reaches the $5 billion. That's the cushion that we have on our budget, and we're going to maintain that policy.
Thanks.
Pretty long-term, I mean, you and your predecessors have lamented having to rely on this roller coaster of revenues.
Yep.
It almost sounds as if you're a bit resigned to that today, or is there a long-term plan to get off that roller coaster?
No, the plan is utilization of the contingency account, which actually, if you go back to a couple of reports that were done by financial experts in years past, they all talked about do your budget, don't change the budget, but have a buffer, have a contingency account. This contingency account is exactly that. That's why any additional surplus from years where we have a higher amount goes immediately into that contingency account to buffer us against the roller coaster ride, if you will, of next year's volatility.
$5 billion enough?
It's based on about 15% of the operating. As we move out into the out years, you'll probably see that number get adjusted into a little bit higher in the out years. But obviously, you know, we handled a major Canadian economic disaster. We managed a reduction in royalty revenues that we thought was coming. So I think for now, that's probably a good number to peg it at.
What happened to the $2 billion drawdown that was supposed to happen on the contingency fund this year?
It did, and then obviously our revenues increased to manage that back. But we didn't draw it all the way down to, that's the point, is we didn't have to because revenues came in.
We have a question from Rick Bell on the line. Rick?
Hi, actually, this is Kelly
Oh.
Cradovan from the Globe. I'm wondering
Okay.
where,
Rick's voice has changed.
I'm wondering where finance officials are predicting the differential to go this year. You mentioned that it is higher today. There is regulations coming in on trains, safety regulations that could push prices higher. What are you expecting this year?
So you're asking me to tell you what I'm putting in as a differential for the budget? Is that what you're saying, Kelly?
Sure. That sounds good.
You'll see next week.
But what do you foresee this year?
You'll see that next week.
Thank you.
You're welcome.
Take another call from the line, please. Operator?
Okay, your next question comes from Aaron Collins with CBC. Your line is open.
Hello, Aaron.
Hi, how are you?
Good.
Just to follow up a little bit on Kelly's question there, when you look at the percentage on the differential last year. I think it's around 26% for 2013. That's, significantly lower than some of the numbers we saw over the last 10 years where it was well over 30%. I'm wondering, have you learned a lesson as a government? Do you think that you may have overstated the case? It was such a big story, and have you learned something moving forward about the importance of that differential?
Well, what I learned is that nobody can predict it, and we don't actually make that prediction. We use industry's predictions for what those differentials are going to be. We use as I mentioned, we had all of the economists in the legislature in December for a bit of a summit on where we would use our forecasting. Obviously, today that differential, if I'm looking at yesterday's numbers, actually we're about 23.8 for the year, percentage-wise. That's not a dollar number, that's a percentage number, and that's the annualized piece. Now, it was as low as 18, it was as high as 40 during the year. We've had annualized numbers in the past that were considerably smaller than that. If you go back 5 years, it tracked pretty close to WTI and to Brent. Until we get that access piece corrected, it's going to be very difficult to predict what that differential is going to be on a go-forward basis. Once you have access to tidewater, that will have a significant impact on where that differential is going to be.
Thank you.
Any more questions from the floor?
Minister, I want to go back to this 1.1 billion over budget, just because it's not really chump change. Now, you mentioned the demographic increases, right, for healthcare and education, that kind of thing.
Yep.
Is there somewhere in these documents where we can see precisely how that increase breaks down? Notably, you point out that a lot of the spending went toward the flood, and I'd like to be able to identify how much of that increase.
So if you were to look at, and I believe it's on page 4, the operating expense was 493 million higher than expected, due mainly to increases for healthcare post-secondary institutions. The disaster emergency expense was $652 million higher. And that is due primarily to the 530 for flood assistance. And, we're still doing there's other disasters happening in our province, forest fires, not a lot on the ag side in this particular 9-month period, but certainly between forest fires and the flood, that was the 652. And that operating piece, as I said, you'll get a lot more detail on that next week when we do the supplementaries, because that is the process that we need to follow.
To follow on Dean's,
And then if you go to page 6 is the breakdown of the disaster emergency assistance.
okay, thank you.
Yeah.
So just to follow on Dean's question about the roller coaster, I know that we talk about this every time we have a fiscal update or a budget, but, here we have 1.1 billion in overspending, accommodated for by a miraculous 2.7 billion in extra money coming in due to energy
Contingency account,
royalties.
yeah.
Are we still on the roller coaster?
Well, the contingency account was there to handle that flood assistance. Remember, we put the $1 billion on the table very, very quickly. That came out of the cash in the contingency account. To Rick's point, we were drawing down, intending to draw down the contingency account all the way down to 691. That was the plan. That was using that contingency account to manage that volatility, not only in royalty or in oil prices, but also in disasters. Because of the fact that we've had a better year in terms of the price of oil, I mean, the price of oil has been much higher than we thought. The differential's actually been pretty close to where we thought it would be, within 5 or 6 percentage points, but the price of oil has gone considerably higher than where anybody had predicted it for the year. That has helped us rebuild the contingency account a lot faster than we thought it was. So from the perspective of the roller coaster, contingency account is there to manage those in-year ups and downs. Thankfully, we did have a higher revenue this year, so we can rebuild that contingency account much, much quicker than what we had anticipated. So frankly, we're ready for next year's issues, should they appear, because we now will be going into the year with a contingency account much higher than we thought it was going to be.
Based on the 2013 predictions, that means there's an extra $4 billion in the contingency fund that wasn't really expected, right? You expected to draw it down by $2 billion, now it's up to 4.6, right? Mm-hmm. Yeah, so it's about.
Remember, a piece of that is what we're anticipating from the federal government as well, in terms of the.
The $1 billion from.
Yes, it does.
Yeah.
We'll take our final question from the phone, please. Operator?
Your next question comes from Mark Patron with the News Network. Your line is open.
Hi, Mark.
Hello, Minister. You're expecting decisions this year on both Keystone and Northern Gateway. If you could just look in your crystal ball just for a second, indulge me. Assuming that you get favorable decisions impact, if any, does that have on your estimates going forward?
I'm going to base it on what the industry is telling us as opposed to what the political situation might be in the United States right now. I think, or for that matter in Ottawa in terms of what's happening on that decision. Industry is very close to the logistics of what would have to happen, as well as they're very close to the investments that are being made in being able to move that product. So when we get our estimate as to what they think the differential is going to be as a go forward into the year, those are the projections and forecasters that we're going to be talking to in the next, have been, for the next budget. I think you'll see that we've taken a lot of that commentary into consideration next week.
What is your general
I mean,
mindset?
all bets are off, though. I mean, if that were to happen, wouldn't it? I mean,
Well, just because we get a,
go back to the drawing board
Yeah.
and say, this is such great news that it just completely blows our estimates out of the water?
well, no, because just because you get a yes decision doesn't mean you're going to be flowing product this year. The differential is real in the sense that it is a basis, if you will, from what the producers in Western Canada are getting versus what you're getting in the Gulf. There's a lot of global issues that are going on out there right now that are going to have potential impacts to what our bottom line. You look at Venezuela, there's a lot of concern right now about what's happening in Venezuela. There's a lot of concern still in terms of what's going on in Europe. There's some positive things happening in Europe. I mean, we could talk about all of the possibilities that are out there that could sway it one way or the other. That's the whole idea of the volatility, which is why we're being very prudent. We're going to stay the course. We're going to manage our finances the way we've projected in the last budget. And, we'll see what happens next year as we round that corner.
One last question from the floor, please.
Mr. Minister, why are you having a technical briefing after this address? Why isn't it the other way around?
Actually, we got some positive feedback to that last year where you can go in and you have the questions answered that you need to have answered from a technical perspective. I mean, we can talk about that afterwards if you like. To me, there was some positive.
It's hard to ask questions about a document you haven't seen.
Mhm.
So we could ask you more intelligent questions if we had the opportunity to see the document in advance.
I could make a crack about that, but I'm gonna refrain from that for now. Yes. But we'll talk later. No, we can do that. We can change it up if you want. We're interested in making sure that you have the right information up front. And obviously last time it was the questions to me that everybody wanted to ask first. So maybe we'll do both.
I guess a good example of that is that Darcy asked you what pretty basic question, what's the total debt number, and you didn't
And I
have it.
apologize. I didn't have that in front of me.
You can take our point if we actually have that, because now we're all running to file for deadlines.
What's the total debt, Steve? I got the wrong people down here. Aaron's up there waiting for you guys. Borrowing this year, yeah. But that's not the total. Are you asking total, or what we're borrowing for ACFA, or what we're borrowing for municipalities? Who was asking the question?
Total.
I'd have to check on what the municipalities did in the last quarter, and I'm not sure what that number was, to be honest with you. So again, when you're talking about what we borrow from municipalities, when you're talking about what we're borrowing for ATB, which we've done since ATB was put in place, when you talk about what we're doing for municipalities, which we've done since 1952, all of that is part of the debt that comes onto the books. So we'll get you the total number then, which is probably, well, I wouldn't want to throw it out there without you getting the actual number. Okay?
That's it.
All right. Thanks very much, guys. We'll see you upstairs.